And it's time now for Smart Charts with Abigail Doolittle, where we look at timely topics through the charts. And this week, Abigail, you're taking a look at stocks, and more specifically, gold miners.
That is correct, Joe. We are taking a look at the S&P 500 and then the GDX. And to do just that is Frank Cappelleri of Instinet. And Frank, you've been relatively bullish. Great call. Stocks only seem to go higher despite what's thrown at them. So talk to us about your S&P 500 daily chart, because you think that there could be more upside ahead.
Thanks for having me. I am bullish on the S&P, and there's no hiding the fact that the target is right near 35.30. Now, it's important because we finally had a breakout here at 29.50, which I think is actually more important than 3,000 because it was back here in 2018 where we could not get above. So currently, that's about 4% away, not too much. From the breakout point, that's a 20% gain. And then from the low in December 2018, it's a 50% gain. So that could sound extended, but as we know, heard the term before, overbought can stay overbought. So we need a little bit more than that. We need more than a drawdown of 4%, which we only had over the last 4 months or so.
So what would worry you, maybe change this view right now based on all the charts that you look at? It's probably not on this chart, but what would worry you?
Well, we've seen some pullbacks before. Each one of them has been able to slingshot all the way back higher.
Okay.
So I think we need to see a lower high at that point and then take it from there.
Got it. Okay, so a lower high. What about lower highs in the RSI? You're talking about relative strength. That's because there are some of those, which is a little bit worrisome, perhaps?
They're warning signs right now, not signals. That's
okay, so right now you're bullish. So let's now take a look at the S&P 500 and the GDX, or the gold miners, because you think the GDX may start to outperform.
Right, so in a market where everything's going up, we want to see relative strength or alpha. So this is the GDX gold miners versus the S&P, and also then versus gold on the bottom. Right, so these are some crazy numbers. Gold itself bottomed in August 2018. From that point, gold is up about 36%. S&P up 19%. GDX up 60%. So mind-blowing to me. So along the way, you see this outperformance versus both of them. And we've seen some inflection points, too, which shows that outperformance started to turn again, which I think we're getting too close to now. Again, both versus the S&P and gold itself.
Would you be more confident in this view, though, if that downtrend there of the GDX relative to the S&P 500 were to break out? Or what distinguishes that little tiny bottom there to make you think that it leads to more upside?
I think because it represents what happened here. It's an inflection point of the outperformance, starting from underperformance to outperformance. So I think that shows that relative strength is starting again. And the next chart will show you why.
Okay, so let's take a look at that next chart, this GDX monthly chart, a long-term chart here.
Right, so we all hear about the parabolic moves in these crazy stocks. We don't hear about long-term, multi-year bases. And that's one reason why I like this. The only reason is that gold already broke out. Gold looked just like this last year, broke out in June. So I think this is one thing to look at. So a breakout through this level here gives us a measured move up to 50.
Wow, so that would be a pretty significant move, not quite a double, but nearly a double. And does history suggest that for the GDX to make this kind of move, we also need to see gold continue to climb higher?
Yes, exactly. And I do think that we had a structural shift in that. Gold broke out, continues higher. It will pull, if that continues, which I believe it will then pull up the individual stocks underneath that, like gold miners.
To put you on the spot, do you think that gold will make a new nominal high?
Eventually, yes.
Eventually, yes. So that will certainly help the GDX. And then lastly, one last cross-asset class question. Does that mean we're going to see the dollar go lower?
The dollar is very extended, and a lot of questions recently. How do all these asset classes sometimes don't move together? Why are they moving up? I think it's the opposite of a market crash where everything goes down. Toward the end, when the strongest markets, you see a lot of stocks and other asset classes moving together.